In this episode of Around the Coin, I interview Alf Gunnar Andersen. He is the founder and CEO of Horde and Bustad, which have different pronunciations in Norway. Alf is in Norway, and we talked about life there, building a company in Norway, the regulatory climate that incentivizes both entrepreneurs and business. And then we spend a decent amount of time talking about fractional ownership in real estate and how he came up with this idea of using crypto and blockchain in the physical world, how they're launching in Europe, some of the opportunities, challenges with launching in Europe versus the US, and much more. I find this concept really, really fascinating of fractional ownership and tokenization of physical products. And certainly in the space of real estate, it's very, very interesting. So tune in, learn about how they've approached the market, and I hope you enjoy. Here is Alf Andersen. Alf, excited to chat with you, man. You're running a couple exciting projects, and you're in a unique spot for me to be talking to somebody on the west side of Norway. I'd love to hear from you. What are you working on? How do you spend your time these days between the different projects you have going on?
Well, yeah, it's actually, I have too many projects. That's probably one of the issues, but that's being a serial entrepreneur. That's a life, right? So my main project or business is a company I founded that's called Horde or Horde. And we have a very simple vision. It's to empower people to take control over their financial life. And we're doing that by providing, connecting your data, giving you insights and feedback on your data, and then looking for where we can disrupt in that industry by providing alternatives to traditional financial solutions. We also do have some traditional financial solutions on the platform, but we really like diving into where we can kind of challenge the status quo or figure out a better way to do something, not just do it because that's the way they did it 40 years ago. So that's my main business. On the side of this, but also connected to this, one of the ventures that we have started is called Bustad. It's basically a way for you to tokenize part of your home. And it started because in Horde, we have around $50 million in loan applications each month for refinancing. And we saw that a lot of these people had a home. So instead of refinancing to 10, 12% interest rate, which is better than 20, we thought, why don't you just tokenize part of your home and get rid of that? Why do you need to own 100% of your home? Why, if you own 95% of your home but have full living rights and don't pay any rent, that could be a better solution, and you can actually get a really fresh restart on your financial life. So that's my two main projects that I'm running. And I'm also the founder and chairman of Fintech Norway, which is a organization that is working on talking to the regulators, doing lobbying, really being the voice of the disruptor in this space. So yeah.
Yeah, that sounds like you do have your hands full. What's the climate like for banking and payments in Norway? I guess, how is it maybe in contrast to the US, or just generally? How is there any uniqueness to the structure, and does that present any opportunities or challenges?
Well, at least in Norway or the Scandinavian country, you have a very high degree of technological adoption, and actually the payment rails that you have in especially Norway are quite unique and quite fast and quite cheap. So we actually do see that. The bigger international players like Revolut, for example, which is this neobank giant in Europe, they're having a real tough time penetrating the Norwegian market because the solutions in Norway are already really, really good. So for us, it kind of creates the perfect environment to to build something on good rails and good technology. And if you're able to penetrate the Norwegian market with a good solution, most likely this will be a solution that other countries will also think is really, really good. So we kind of look like Norway as a sandbox for us.
Yeah, it's like a high bar since the existing options are so good. Is that because of what do you have an idea as to why that is the way it is? Is there something unique about the structure of the government or the way that the banking industry is structured? Like, is it, because my take is that that's a good thing, that people can pay fast and easy and it is widespread technological adoption. Is there something that you would point to attribute that progress to? Because most governments struggle to really do anything successful.
Yeah, I think there has been a really good climate for cooperation, especially in Norway, between the banks. So a lot of these initiatives, like you have something called Bank Accept, which is like internal banking rails that they developed, which is far faster than the Visa or much cheaper than the other European rails. So, and one thing that is also pretty cool is that all the banks in Norway, they went together and they created this unified version of doing customer a strong customer authentication, basically. So if you authenticate yourself with one bank, all the other banks will trust that identification. And if you go to the UK and tell a banker there that in Norway, one bank's trust another bank's identity verification, that's very far-fetched to them. I don't know how it is in the US, but I think it's because you have a society that is scoring really, really high on trust. I think we're on the world, top of the world there in a trust-based society. So that has created a good foundation for corporations to cooperate.
Yeah, it's interesting. Is it specifically the trust in the government or trust in institutions more broadly?
I think it's both. Like Norway is a really down-to-earth country. You're not supposed to stick out too much or be too braggy. So everyone's kind of like it's not like we look at Americans like very like loud and right, and that's cool and that's what you need sometimes, but it's not something that's necessarily the way a Norwegian would do it. So I think there is like a unique culture that has made this foundation for this to work in the way that it has. And it has its positives and it has its negative sides. But like in financial institutions as well, we have very strong financial institutions who have some of the strictest regulators in the world and highest amount of capital requirements that the bank has to have. And that's a real disadvantage for them when they're competing with international banks, because the international banks can then have higher margins. But all these creates like a very stable and solid economy in Norway.
Yeah, that's a good point. And so much of, I think, the debate about how to architect governments is undervaluing the effects of the culture. And the culture meaning just the consistent set of values and norms of behaviors that people have in that civilization. So I think what could work in one place might not work in another when it comes to banking or healthcare or whatever else that the government is involved in.
And it's a bit unfair as well, because you got to remember that Norway is a very rich country, right? We struck oil, literally.
Yeah.
So if you have a lot of money and thankfully in the 70s when this was discovered, you had people leading the country who saw what was the best for them. It was actually talked about selling all the rights to the Americans, but they decided to develop it themselves. And it's very easy to, when you have an abundance of resources, to have free healthcare and all that stuff. So it's kind of not fair to compare it with all the other countries, of course.
Yeah. Although there are so many counterexamples of places, Africa comes to mind, of countries in Africa that have abundant resources but don't have either the organization collectively or the infrastructure development, or just the corruption is a major factor when you don't have strong organizational and trust in government. So yeah, it's not just the struck oil; it's your struck oil, and you also there is an existing cultural pattern and infrastructure to be able to extract it in a responsible way and distribute those resources to people so that it's not hyper consolidated. Like you could say that same thing to be true in the Middle East, specifically in like Dubai and United Emirates, where they have plenty of oil and there's a lot of money, but it doesn't seem to be distributed in the same way.
That's very correct. Like Norway is traditionally a social country, not a communist country. We do have capitalism as well, but you have this good synergy where the government knows how far they can go, and they, as far as they can, they try to create fairness and equal of opportunity. So, like Norway is the most egalitarian country in the world. And yeah, we just have to thank the people who basically run the country from the 50s and 60s, and those values has stayed on. So very lucky to to be born in a country like this.
How do you feel like that? I mean, from an entrepreneur standpoint, it's not a typical. Generally, the entrepreneur seeks to pay a price in the short term to have a reward much larger than average in the long term. So, there's some risk calculation there, but you say, hey, I'm going to start this business. I'm not going to take a salary for 3 years. And in hopes that when we do build it out and raise money and grow, then it'll be worth, 100 times what my salary would have been worth. Do you feel that there's an impact of, in some way, how society is structured there that either prevents or accelerates the entrepreneurship spirit? I mean, I could see it going both ways, but I'm curious what your experience is.
I think it goes both way, actually. You have, there's no one who's going to starve if you start a company and fail. There are good social programs to make sure that you get on your feet, and there's also government support you can apply for when you're starting a company. It's not much, but it might help you to kickstart something and validate the idea that you have. And then we're quite good at supporting companies in the early stages. Where we really, really suck is these mid stages, when you actually, you've created the product, you see you have customers, now you need to grow. Then there's this valley of death, and there's very little VCs in Norway to carry you over that valley. And then you basically just have to survive until you become big enough for like equity firms, or you can do it on yourself. So it's easy to start, but it's hard to scale in Norway, I would say. Yeah, I would say.
And has that changed after COVID, where so many companies now are remote, so many VCs are deploying capital over Zoom? Do you feel like the climate has shifted, or the opportunity for mid-stage capital is better now, given, if you run a remote team, your people are all over the world, or even if they're just in Norway, it seems like access to capital is better now than it ever has been. Is that your experience?
Yeah, at least it was. Now the sentiment is changing a bit, right, because of the stock prices and also the volatility within crypto. But I still would say it's quite good for startups and founders. I don't know necessarily if it's because you're like based in Norway. That's the issue. For us, it was mostly that you only operate in Norway because. Even though you have European regulations that says, for example, Horde, we have a European payment license, we can move to every other country, but there's still a lot of local integrations you have to do to make it work. Yeah. So now we're partnering up with bigger firms. We're using the Klarna railways and stuff like that to expand. But when we go a year back and we were basically saying, yeah, right now we're focusing on Norway, international VCs would say like, okay, that's cute. That's like 5.5 million people.
Yeah.
Call me when you go to Germany or UK or something like that. So that was challenging, even though we had a really good business and a good growth in Norway. It was, they weren't interested before you shown some kind of global ambition.
Sure, that makes sense. And it makes sense from the investor's perspective. You have to attack a market that is large and growing. So tell me, between the two businesses, where are they in terms of traction, either money raised or however you measure meaningful progress? I know you've been working on Horde for 4 years, 2018.
Yeah, late 2018. So I started working full time, quit my job in early 2019, and that's been quite a journey. We're closing up to 200,000 users in Norway, which is decent size given that's a small country. So I think we are the biggest personal finance management app in Norway that's independent, like not a bank. So that's been really, really fun. A lot of challenges. We really wanted to be a brand that was consumer focused. So that's why actually we're called Horde or Horde, because we're a horde of consumers. Like you can say that we're kind of like just walking around being consumers. And what we're trying to do is to concentrate this horde in a direction, because then you have massive power, right? Everyone who's seen Walking Dead, they know that when the horde is coming, you got to get out of the way, right? So we kind of like those value that it was a company by consumers for consumers, and we're actually also owned by consumers. So we decided to go with crowdfunding and have 2 Norwegian records in that. So we raised around $6.5 million in crowdfunding. The next round will probably be more institutional, we think. We are talking with some players, but we haven't decided just yet. But that has been really good. We have 8 banking partners in Norway, delivering 50 million plus in loan applications each month. And yeah.
That's awesome. Yeah, I'm curious about the crowdfunding decision. Was that were the investors mostly or all in Norway? And I think I remember the deal being done on dealflow.com. Is that right? And what do you attribute the success of the crowdfunding campaign to? Is there something you guys did on marketing? Did it just kind of organically worked and struck a chord with people? Anything that you've learned through the experience?
Well, for us, it was when we did our crowdfunding, we also passed the first round. We were closing up to 100,000 users. So that user base and of course the brand and that the way we spoke that this is an app by consumers for consumers, I definitely think that was a huge factor for us having a successful round. So Dealflow is only in Norway. So the rounds we've had so far has been only Norwegian, but led by some bigger angel investors to kind of negotiate the pricing on behalf of everyone else, basically. So and the reason why we chose to do crowdfunding was a bit. It was actually a plan B for us, to be honest, because we were partnering up with one of the bigger community banks in Norway, and being a naive founder, we really wanted to change the way some of this product works. And you had a lot of people who agreed with us in the bank, but as you progress and more compliance people come in, more and more lawyers come in, more and more egos come in. So they started chipping away on the product, and suddenly was like, this doesn't feel right. It's not the match for us. And so breaking up that partnership also came with the consequences that they they pulled back, or they were going to make an investment in Horde that was significant. But for us, it was like, we can't launch this product because we don't believe in it. So we won't be the company we're going to be by going down this route. And especially the final nail in the coffin was when the bank wanted exclusivity. So they were basically going to tell us or give us the green light for doing something with a new bank. And I was like, we can't live like that. That's not the company we want to do.
No, unless you buy them, if they wanted to acquire you guys, that'd be different.
That's a different story. But we've also in that time been talking to Dealflow. I thought that was like an exciting thing for us, giving our brand. So we turned around in a couple of weeks and launched the campaign, and it was a huge success. And we're very glad we went down that road.
Yeah, it's awesome to have the largest crowdfunding campaign. Is it in Norway? Is that right?
Yes. Yeah, we have actually two. So because we did the first one, and then we did a second one, and the second one was twice as large as the first one. So it's only been growing.
Now I know in the U.S. there was a recent regulatory change that enabled crowdfunding campaigns on these platforms, the Reg CF, Regulation CF for crowdfunding. Is there some change recently that has enabled people in private markets, regular retail investors, to make investments in private companies, or has that always been the case?
There's always been the case in Europe, but there is a lot of regulations there. So, for example, if you're going to have your campaign go out to more than 149 people, then you have to apply and write this prospectus and give that to the authorities. That then they have to approve it. So there are like levels on the regulatory ladder that you climb, and it becomes more and more difficult.
So I assume you guys did that. You wrote up the prospectus.
Yeah, and Dealflow was a great help there. And my background is like, before I became a founder, I worked almost 10 years in the financial industry. So I've read thousands of those. So it wasn't that hard for me to write up one, especially with the help from Dealflow. So yeah.
Yeah. It was. What were you doing specifically previous to this?
So my background is that I originate from an entrepreneurial family. My dad was a founder, and on my mother's side, they've run shops and motels and whatnot. So, I was supposed to be a rock star, not a tech entrepreneur. But I decided to get a degree, and bachelor degree in economics nonetheless. And I worked a couple of years with a family company, and then I was recruited to a company that manages money for wealthy individuals, so capital allocation firm or wealth management, basically. So I came in there as a trainee, became advisor, senior advisor, and partner. And then when I reached the partner level, it's like, okay, well, what do I aim at now? And that's what when I realized I needed to do something else with my life. And I didn't want to do this for another 30 years. Yeah.
So what do you mean you were supposed to be a rock star? What, were you in a band or you?
Oh yeah.
Yeah.
So like the height of our career was that we did tour or a mini tour in New York I think it was in 2010 or 11. So that was cool. And like all great bands, internal conflicts and all that stuff, and people grew up and got jobs and got kids and whatnot. And basically, I used to say that I wasn't creative enough to be a really good musician, and I'm not analytical enough to be a really good financial analytics, but I'm somewhat creative and somewhat analytic, so that fits very well to be a founder, basically. So I'm very creative when it comes to financial solution. If you ask the banks, right, then they see us as disruptors, so that's fun.
That's funny. Yeah, I certainly resonate with your perspective and personality type, I should say. Super interesting. I like that. I'm curious about Bustad. Make sure, can you pronounce it? Make sure I pronounce it correctly.
Bustad.
Bustad. Long U. So the concept of to me, the concept of tokenizing ownership of homes, effectively tokenizing the ownership of anything, but especially useful for real estate and large items that people purchase, makes so much sense. It almost feels like there's this reservoir of pent up economic opportunity that can happen, given the fact that when you own the home, you don't necessarily care about the financial part of it. Like I live in Portland, Oregon. When we moved here 6 months ago, I wasn't interested particularly in like investing in the city as like a portfolio investment, but I wanted a house to live in. So you just go down that path. And then for most people, they take out a mortgage, and a significant portion of their savings goes into the down payment, and a significant percentage of your ownership in this home through the debt that you take out with the bank goes into that. So it seems to me the alternative is you rent, and renting is you own 0%. So it's like you either own 100% and take out a mortgage or buy it outright, or you own 0% and pay it all to somebody else who likely owns 100% of it. I guess almost a similar question what I asked you earlier, but has something changed recently in the regulation that has allowed tokenization of home ownership and real estate to occur? Or do you view this more as a technological innovation that presents the opportunity today?
In the way I look at it, it's more that it's probably because it's in Norway and you have a really digital society, so everything is public and open. You have public ledgers. You have one of the most open and transparent real estate markets in the world, and everything can be done digitally. So for us, it was more like the reason we started Bustad was because we saw a problem in Horde, in our main company. We saw that people got into a lot of debt. Their regular mortgage bank didn't want to help them out. They was like, okay, you have too much debt. We don't want to touch that. And then you have these special banks, these niche banks that say like, hey, bring your mortgage over here and we'll charge you 3 times the interest rates, but you'll at least don't pay 20% interest rate on this huge credit card debt you have. So it's kind of like taking a bit advantage of people in a shitty situation. So that was kind of what we saw as the first like pain point we wanted to solve. That why does 60% of these people, they usually have a home as well, and at least within our group. So we saw that, okay, at least 60% there. If they, instead of owning 100% of their house, what if they only own 90% and then got rid of that entire mountain of debt? They were debt free from that shitty debt. So they actually get a real reboot of their economy. We can drastically reduce their monthly payment. I'm talking like in most cases, we see that we can almost cut it in half because that debt is so expensive. And they can buy it back whenever they want in the future. So that was what we thought was kind of sexy as well, that you have this flexibility that, okay, for me right now, and let's say like the interest rates are rising. I was a founder, built a new house on my old salary when I was a partner in a financial firm, and now I'm a founder. So I got really high leverage. And if the interest rate continued to rise, what would be my options to severely downsize my living? Okay, that I can do that, but I also have 2 kids. So how can I? What choices do I have then? Should we sell the house and move to a smaller house? But what if I could just, if for this portion of my life, tokenize 10 or 20% of my home, have someone else take part of that value growth in that part, and I'm getting reduced payments quite significantly each month. So that was like the use case we identified, and basically looked at the current financial institution wasn't offering a good enough solution. And then you have the whole trend with the sharing economy, right? In Norway, this sharing car is called nabobil. It's really popular. That you don't have to own your car. You can just, some people own a car and they can rent it out, and you have keyless, so you just go in and you open it with an app and you can drive it around or rent it for several days if you'd like that. So we do think that the society is very ready for a new way of looking at house ownership.
Mm-hmm.
And then it's your decision if you want to put more equity into the house. You can do that as a saving, right? But yeah.
Yeah. Well, I'm curious on the first point. So when people are in credit card, is it specifically credit card debt that people feel underwater with? And you mentioned the alternative banks offering 3 times higher interest rates. Is that what you've seen in Horde? Is that people get stuck in that situation specifically?
We see a lot of, like, in Norway, there's 1.2 million people who has interest-bearing credit, and around 250,000 of them, they're in bad shape. It's like they have too much debt, and then there's another 200,000-300,000 which have a high enough debt that the regular mortgage banks don't want to help them out. So that was kind of, we saw that. But this is technically a healthy customer. So what we actually do recommend to those customers is go to this. Today, we recommend go to these niche banks, get everything into that loan, and after 2 years, go to a regular bank. But it's a lot of hassle, and it's very expensive and a lot of fees involved there as well. But it's still better than just having this mountain of debt with you for like the next 20 years.
Yeah, and the idea being is that they have a down payment, so they own, maybe is generally when people get mortgages, they put say 20% down. So say you bought a house for 500,000 USD, you'd put 50,000, you'd put 100,000 down, 20%, and then you would have 400,000 that is mortgaged with say 5% interest rate, and that 400,000. You pay usually over a fixed 30-year mortgage. So you negotiate up front and you have the interest rate, and then that's fixed over time. When someone is in credit card debt, in addition to this, they might have 50,000 of credit card debt, something like that. They can't pay it off. They don't have the income coming in. So the problem they're having is specifically the credit card debt, and what I'm wondering is, why are more people not refinancing their house to pay that off? So, if somebody puts down 100,000 in the house, why would people not refinance that and take some of that cash out to pay the credit card? I'm just thinking through this.
Yeah, and I totally agree with you. And some people do that, but generally, and I don't know if this is a Norwegian case, but if you like in Norway, there's a regulatory demand on at least 15% equity of your house. So you said 20%. In Norway, the minimum requirement is 15. So if you have lower than that, the bank probably won't help you. But it's also like I don't know if the bank is judging the people or looking at the credit history or whatnot, but they usually don't want to bake that loan, those credits into a regular mortgage. And there's not a really good explanation for this. For a lot of these people are just average people who grew up in their 20s and did some stupid mistakes, and now they've got their shit together, right? And so it's creating this market of this for these niche banks. I think it's also a lot of pride involved here, that some people don't want to go to their local banks where they've grown up and tell them, hey, I really screwed the pooch here. So usually when they refinance, they want to refinance with another bank. So that might also be an issue. And I also think that it's the lack of knowledge that you have these options. And if you have a finance degree and you show that you have gotten your life together, I think that most regular banks, you can convince them. But it's hard for people because you have this huge information asymmetry between you as a consumer and the bank on what, like, people don't know that there's a 15% equity limit, for example, and there's also other rules that the bank has to apply by. Yeah. So people buying into this. So say on the buy side for the housing tokenization, I know you're relatively early on this, but do you see it as
retail investors who believe in the city that this person is in will experience growth, or is there some that I assume that would be the reason? Aside from that, it could just be a good deal on that. So if the person purchased the property for 500K, maybe the 10% that they're purchasing through tokenization do you see the likely scenario that the homeowner sets the price? I'm thinking through this like tactically how this would work. Would the homeowner set the price and say, this is, I'm offering 10% of the house in minimum quantities of $1,000, and it's almost like in startups you have post money valuation, so the value of the house would be set to like 450,000 or yeah, tell me.
I can walk you through this, because this is I actually wrote about this in my master thesis back in 2019, and then I was thinking like you think now, and it suddenly become very complicated, right? So one of the great things that we are doing here is that we're not saying that you are tokenizing your house. It goes into our portfolio. So you're actually, if you have the Bustad token, you get an exposure to the entire Norwegian real estate market. So for you as a consumer, you don't have to think about the technology. You don't have to know anything about blockchain, because that is all basically for you. It's like you're selling X% of your house to Bustad, and we're handling all the blockchain thing and the tokenization part on the other side. So so how it works is that in Norway, all housing prices are transparent. So in most countries or in big cities, we can very accurately say what your house is worth, because we can see all the other houses that's been sold in the vicinity.
Same in the US.
You have, and you have public records, and so you can find out when it was built. You have a lot of technical aspects that you have to follow when it comes to building code and stuff like that. So in most, it's kind of like red, yellow, red light. So if it's a green light, then we say, okay, we know what this house is worth. So we can just have that fully automatically. If it comes in at the yellow house, we'll say, okay, we estimate that your house is in this range. You need to get a realtor validates the property value. And if it's red, it's because you probably live way out in the sticks. So we don't have any kind of way to evaluate the property value. And then we basically, the thing is there that we agree on the price, but then the Bustad, the token holders, they get a discount on the housing price, because you as a consumer, as a house owner, you don't pay any interest rates to the Bustad. So that is kind of like we're finding other mechanisms for value transfer here than the traditional pay. Because if you were to pay this monthly rent, then we would decrease your monthly expenditures again. So you will probably not be that much better off. So we're finding these alternatives ways of transferring the value, that we're buying it at a bit of a discount. If you want to buy it back, we track the housing prices, so then you buy it back, and we add the value of the trajectory of the housing market on top of that, and you can never buy it back for lower than what you tokenized it for. That is also really important. So that way we can protect the holders of the Bustad token, that they won't get wiped out if there's like a sudden 20% drop in the property market and everyone bought back their houses and you were left with a lot of cash in Bustad. So we built in these mechanisms for safeguarding and having a fair value split between the token holders and the Bustad homeowners. So what we want to create with the Bustad token is not some like 10x coin. That's not the point there. The point is to create an actual stable coin that is backed by actual assets, and that is growing in a rate that is higher than the inflation. because that's a huge problem. You probably know this. It's both in Norway and in the US, inflations are like all over the world, the Western world at least, inflations are running wild because the fiscal policy that we have been running for the world by for the last 40 years has been on hopes and dreams. And that's probably why Bitcoin and other cryptos are really important. So we want to really go back to the standard where the means, the monetary or the means that you pay with are actually backed by actual assets that has a value. So yeah, that's the idea.
I like the mechanism of restricting the homeowner to not being able to buy back when the housing market drops. When the homeowner sells the property, I assume that's
he can buy it back, but it will never go lower than the price that we originally purchased it for.
Right. The homeowner can't accept $100,000 for 10% of the property and then pay back $50,000 when the housing market drops. What about the case what do you think about when the homeowner decides to sell? Would Bustad have any voting rights in that decision? And I assume the answer is no.
We don't have any voting rights in that. That's totally your decision. And you have two choices there. One, you can buy back the property for Bustad or our shares and sell 100% of the house. Or you can sell 80% of your house and the next buyer can buy back if he wants that. And what happens there? Okay, that basically means that if you live in a $500,000 house and you've tokenized 20%, meaning that your remaining is $400,000, you can basically sell a $500,000 house to a person who has $400,000 in purchasing power. And what happens then? Well, you have a lot more buyers, right? What happens when you have a lot more buyers? You get a better price.
Yeah.
So why wouldn't you live in a house that's 20% more than what you could afford?
All right, let me process this a little bit. So if you had if you have 500,000, it's super interesting. I love this idea, by the way. So you have a $500,000 house, you sell 20% of it. So you sell 100,000 to Bustad, and that's owned by the community of token holders. One limitation is you can't buy back for less than you
less than 100,000.
If you were to sell more of the house, is that in the example you gave, that's when the homeowner owns 100%. That's assuming there's no mortgage, right? Because
no, you can have a mortgage as well. That's no issue, and we allow you to take our part as partial collateral for the mortgage.
Okay, so would this make sense realistically? Someone has a $500,000 house, they put down 100,000, they have 400,000 in mortgage. Would they take the 10% that they sell it to Bustad? Say it's at fair market value, it's at the 500K. Are they paying the bank back in that example? So they get the payment from Bustad. I'm trying to identify where the 10% comes from. Does it come generally from the owner's percentage, or would it be like the owner can't sell the bank's ownership?
Okay,
right?
I think this is because it's different in Norway and in the US. Because in the US, I think like the mortgage it's totally attached to the house, right?
As opposed, what's the other option?
In Norway, you have the house as collateral, but the debt is attached to you.
No! I take it back. It's the same. It's the same way. So I would own 100% of the house, but I would have debt, and the house is collateral, right?
Okay, so let's take this example with 500,000 then. So you have 400,000 in mortgage, and then you tokenize 10%, which is 50,000. What we would do then is that we would pay down on your loan. Actually, we will pay the bank, so you will have 50,000 less in loans. You have 350,000 left. Then you can either buy it back and sell 100% of your house. Then you're selling a house for full market value, 500,000. But you can also decide to say that, hey, I just want to sell my 90%. I don't want to buy it back before. So that means you're actually listing the house or the living rights to this house for 90% of the value, which is 450,000. So it basically means that the next person who comes to or looks at this house, they can decide to buy 90%. Maybe they couldn't have afforded the house if it was 500, but maybe they can pay 470, and they can buy it back basically. So basically, you could address more buyers, which would then give you probably a better price for your house as well. Because you basically can sell a $500,000 house for 450, and that will attract more buyers.
Right. Okay, let me ask you this. So, how do you factor in the value of the rights to live in the house? So, say I traditionally I buy a house, I own 100% of it, I get a mortgage. What about the case where I buy a house, I own 100% of it, and I sell 95% of the house to...
Oh, you can't. We've limited at 20%. Otherwise, the other mechanisms for value transfer doesn't work. So you can maximum tokenize 20% of your house.
Is that a regulation, or is that a Bustad policy?
That's a Bustad policy. Because if we were to let you tokenize 95% of your house and you pay no interest rate, that would be a really good deal. Why would you ever move?
Yeah. Well, why I'm wondering, what if there's a Bustad number 2? What if there's another token out there, right? It's a free market. There could be, what if someone said, okay, Bustad, I'll sell you 20%, then I'll sell another token project 20%. Could that happen?
Well, I guess technically, right now it's like we are looking at the deeds of the house. We know who owns the house, but technically, yeah, there could be another Bustad who came in and had a looser policy than us. But we spent quite a lot of time to figure out how this policy should work, because you don't want to create if you create something that you could tokenize, let's say you could tokenize 90% of your house, no one would ever buy it back. So what would happen to the Bustad token? It would be completely fictional value, because you could never redeem the value. So that's why you have to find these sweet spots on where it's still a decision for you if you're going to buy it back or not. And that's another thing also. If you decide to sell only, let's say, 80% of your house and not buy back the 20% of Bustad, then you're also paying a small fee to the Bustad token in that transaction. So that is how also we take part of that, so we don't get left out of the transactions forever, basically. Because that could be the norm, right? That in 10 years in Norway, everyone's like, oh, no, we only own 80% of our house. Why would we own more?
Yeah. I mean, I could see a scenario where, say you took a city of 1 million people and you just said, instead of everyone owning 100% of their own house, and assuming all 1 million people had their own individual home, you said everyone owns 1/1,000,000th of every house that there is. So you're, I mean, we would never get to that point, but just food for thought. It's like you could. The other thing I'm thinking is, if somebody sells the house, say the owner in this case sells the house, the owner is forced to pay back the effectively the loan, right? I mean, they would be forced to pay Bustad
from the
back.
bank. No.
Sorry, maybe I think I misspoke. So say Bustad owns 20% of a home. The owner decides to sell. 20% of the proceeds from that sale have to go to Bustad. Is that right?
No. Because you're basically just selling your 80%. You're not selling our 20%. So we will, but you will have to pay a fee, because you're leaving Bustad out of the transaction. So that's also one of the incentives to say that at in some cases it might be beneficial for you to buy it back before, if you believe that you have a better understanding of the pricing, house pricing.
That's interesting. So how do Because I generally think of the rise in interest rates. The reason why people invest in real estate is that they understand that there is going to be a high likelihood of a transaction in the future that is higher in value than today. You know, I buy this house for $1 million, knowing if it's an investment property, knowing that it'll likely get to 1.5 in a couple of years. In the case of Bustad as an investor in the token, is that part of the offer here? Because I would think, okay, I invest in this token, I buy a piece of, you know, Miami, or a piece of, you know, maybe I buy 10 houses for 1,000 each, 10,000. Now what's my return on that investment? I would think of it as through the transactions is where I find return. But is there other mechanisms that you've built in that incentivize token investors?
Yes, there are. Like, if you look at the Norwegian housing market and the Norwegian economy, and Norway as a country, it's the most stable country in the world. It used to be Finland, but since they share a large border with Russia at the moment, I think that Norway is
taking over,
probably number one. So you have a really, like, of course, we have seen hyped or property markets grow in the last years also. But if you look at the last 20 years, it's been a very stable growth around 6%. So it's not these huge leaps. And what is also very strange about the Norwegian housing market is that 80% of Norwegians, they own their own house. So there's very little speculations. And that's, if you go to Germany, it's like 40% of the population own their own house. So if you have more or less people owning their own house, that means there's more investors and there's more speculation in the market. And that leads to these higher or bigger bubbles, as you might say. But if you look at the Norwegian houses pricing during the subprime crisis in 2008, for example, you did see a small dip, but it was like 8-9 months, and then we were back at it. So if you look, it's like the curve of it's ridiculously stable to look at. And you also have regulators that go in and put in regulatory rules for the banks on how much they can give out loans. So technically in Norway, it's not the bank that's do the credit assessment. To a large degree, it's actually the regulators, because they have these rules, like you can't borrow more than 5 times your income. The bank has to prove that you can survive a 5% rate hike. If you have consumer debt now, you're not allowed to give new loans that are more than 5 years. So basically all the banks are like pushing that to the max, but that gives a really stable and solid economy.
Yeah. So I'm totally hearing you on the point of the incentives for the token investors. Assuming we take this model and abstract it away from Norway for a second, and just say, let's, take because to me, the model is more interesting than the specific housing market conditions in Norway, because I think it can work anywhere, really. You're effectively offering, in my mind, you're offering the value proposition to the investor as, hey, own a piece of a city and a piece of property that you think is a good investment. I can't invest in, I think Miami and Austin and other cities across the world are going to become really exciting hubs. They're going to grow, and I want to place a bet on that in some way, but it's how do you do that, practically speaking? And I think what you're describing, this model opens up that opportunity. I think the pathway for the investor is going to be the rise in property values, and the rise in property values, the manifestation of the rise in property values are through transactions. Otherwise, who's to say what a place is worth other than when it's actually transacted? So I think my thought is the mechanism of return on the investment for the token holders are those transactions. And I was just curious if that makes sense to you, because I'm picturing a dashboard of 500 houses in, I keep using Miami, but it could be any city. And you say, these are the offers that are currently up there. And you can I'm going to own, $500 to this and 5,000 of this house. And you're kind of like, it's a whole market that you're creating, buy and sell market.
And I totally agree with you on that. Like the reason why we start with Norway is because the society is so digital. So we can do everything digitally. I don't know how it is in the US. You probably have digital deeds, but I don't know if you have to like go to the courthouse and get something rubber stamped or whatnot, and that won't work with the model we're building at the moment. But like the other Scandinavian countries, it could probably work very well, and they also are stable economies. So basically, I think there's two different, because you're looking at it from like an investor perspective, where you're saying I want exposure to a real estate market that I believe will grow more than what would be like normal. I think that this is a really good place to be. But we're looking at how do you create an actual payment token, a stable coin, which is rock solid and has like this slow and steady growth that protects you from inflation. Basically, if you had a portfolio of $100 million, you would probably say, okay, I'm going to put like 30 million in this one because this is safe, right? And then I'm going to put 10 million in shit coins, and then I'm going to put X millions in these more risky markets or assets, right? So what we are building here in Norway is this base foundation. Like everyone who owns crypto today, if it's Bitcoin or Ethereum or whatnot, an offer for them to, okay, I think there's going to be more volatility now in the crypto space or in this token. I want to move over to this. I don't want to go into a stable coin like Tethered or USDC. There might be several reasons regarding auditability, but also especially that it's basically eating away your money with inflations. So this is like a way for you to put some money somewhere that is that's going to remain its value basically, and have a slow and steady growth. So that's the business case for Norway. You could take the model and do it with another value proposition, for example, in Miami, where it would be like, oh, we really think Miami is going to be this metropolitan beacon, and owning property there in 20 years is going to be worth a bunch of money. But it would be like a higher risk play, basically. And you just have to differentiate with the investments portfolios.
That's super interesting. So the stabilization of the currency effectively is you're using the value of real estate in Norway as like your consumer pricing index, where instead of taking the average price of bread and a car and all these things together, which is how you can collectively identify where the currency is. You can identify inflation by the rise in price of standard items like bread and things that people have been purchasing for a long, long time. And the housing, and you're effectively allowing that peg to be, instead of on CPI, consumer pricing index, it's on the real estate market, and said, hey, we don't think this is going to change very much, which makes a lot of sense. I can certainly see that. So people would buy in on the investor side for stability as opposed to gains. And they know that they're not taking a loss on it. Yeah.
That's correct. Yeah. So you're basically buying this as a holding option, or like your nest egg, or something. Like, if I'm going to be careful with giving some projections, but like we would estimate it would be like 4 to 6% a year, which is a heck of a lot better than what you're getting at the bank at the moment. And you can get exposure like this, and you can get out like this.
Right. And sorry to interrupt you, but the 4 to 6% per year would come from the token itself, right? It would be the Oracle would be paying 4 to 6% per year, and those fees that you're paying to the owners of the token would come from the fees that you took from the transaction of the house, right?
That is actually really interesting, because in theory it will just grow the value of the price of the token. But what we also implement is what we call a burn protocol. That if the liquidity in Bustad becomes too big, then Bustad opens up to buy back token at that certain price. So we're basically a market maker there, saying that this is the price. Like, we are buying back at this price. So because it's no use of having a stable coin backed by real estate if 50% is in USDC, for example, or something like that. So then this protocol would be open. So, but you as a token holder, you would then have to go there and exchange it for USDC or whatever stable coin that we would offer.
Right. That makes sense. Man, you guys have given this so much thought. Such an interesting idea. And remind me, is this in the prototyping phase at this point, where you're effectively architecting and building?
Yeah, we're in the building. We have architected it. We've built the blockchain, all the blockchain parts of it, running it on the Ethereum chain. So we're opening the first phase, which is minting now, probably right before the summer sometime. And then we've started building like the big job here is the off-chain part, right? It's connecting to the public records to do all the signing and also build the pricing engine. But we have 100% control over that part. So we know what we can build it, because this is basically what we've done for the last 3 years.
Yeah.
So I have a bet with my chief operating officer that we will tokenize the first home in 2022.
Oh, I like that.
He say. So I got skin in the game.
What's your bet? What's that? What happens if you lose?
Oh, it's only money. It's like what would be like $800, something like that. But it's the glory. That's what this is about.
Yeah. No, I only make bets $5 or less. So that's awesome. Well, I hope you succeed. Genuinely, I love the idea. I feel really excited talking about it, because it feels like the kind of thing that can unlock a tremendous amount of economic activity and potential for people, which is super fucking exciting. So keep leaning in. And are you writing about this? You mentioned you had a thesis out there. Is there anything that you've written publicly, or if you were on Twitter or anywhere else? Yeah, throw it out.
But that is kind of funny, because like you can go to bustad.io and you can sign up and you will get more information once we're ready. But it's actually been in stealth this entire time. So you're actually the first person. This is the first time we're speaking public.
Nice.
About this. So that's pretty cool. I forgot to mention
that.
Yeah.
Hell yeah. I'll mention that in the intro.
So there's a lot of so there are some like Norwegian press that knows that we're doing something blockchain thing, but they don't know what it is. So yeah, that's cool.
And are you active on any social platforms, or?
I'm probably most active on LinkedIn, but I am on Twitter also. I've had an account there for ages, but I never used it. But because like all of these, of course, the Elon Musk noise, it's like I gotta check this out. I gotta be more active here. So I'm trying to be more active, but you work 12 hours a day, and I don't have time to sit around on that all day. But
no sweat.
Yeah. I think it's ALFG86. I think my Twitter nick is.
Cool. Well, congrats again, man, and look forward to having you back on someday.
Thank you, man.
See ya.